The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Asia, ready to start the weekend. Couple of things going on outside. Seems like a festive time outside, and it's Friday morning in the States. And there's really one thing to talk about right now. I've got a chart of the yen up, and we talked about trying to find areas to buy this thing. And we're in the nosebleed section now. So as we looked at this thing, 101.33 down below, caught some levels, 105.44, came back and retested those. Tried to pick a couple of support areas a little bit sooner than that, and that's okay. This has been the gift that keeps on giving on the long side here. And the Bank of Japan, I know this is probably not new news to anyone, but unexpectedly the BOJ, Bank of Japan, has decided that they're going to start printing money in a large way, and that rocked the yen pretty good. And they are concerned that they have no inflation, zero. Here's the situation on the daily, and we talked about this area right here, top of our box, 108.39. That held for a little bit, and then we closed above a day or two ago. As we were crowding up into that, it was a good target from that push from 105.44. That was really what we had to look for, was this target. Then we started crowding, close above. Then you remember, it's okay to be long, not okay to be short at that point. And wow, just what a move! And that is the kind of move. You keep your stops in force here, and your stops are right below the 108.39 area, in my opinion, on a trade like that. We never got the retracement back into that area, which, for lack of a better way of putting it, sucks. Because those are the most powerful trades, those retests, as we always talk about. But we didn't have any conflicting information to not be long. And, you put your stops on this type of trade, intermediate, long-term, below 108.39. And if you get stopped out, you get stopped out. But, when you have moves like this, and again, this was kind of unexpected. So I wouldn't call this trading. I would call this, not playing defense, but I call this being able to use these tools and trying to be on the right side of the market instead of the wrong side, and you just happen to get the benefit of an unexpected good announcement in your favor. So, these types of moves, these 300 pip, 400 pip moves, you make your entire year in a trading environment off of moves like this. And then, as I possibly have talked about before, most of the trading year, when I was in Chicago, I just consider that the majority of the year I was going to get chopped up. And I hoped for 5 big trading days a year, 20 really good trading days a year, but 5 huge trading days a year. And then the rest of the year, 20 days a year, I'd lose decent money. 5 days a year, I'd get whacked a couple of times. And so, you try to look, you try to mentally prepare for things like this, and when they happen, and you have to manage that trade. So what do you do now? So let's stop talking about the past. What do you do now? So let's look at the 240s. Nothing in the way here. No conflicting information. And to be honest with you, it was so unexpected. This is the type of thing, I think if you've been in the trade, obviously you've made some decent coin here. But, if you hadn't been in the trade, I don't think there's no levels, no inflection points to kind of wait for support on this. This might be a runaway train. And what I think you got to do on a trade like this, if you're already in this trade, is really probably relax the stops a little bit. There's going to be some volatility, but I think there's more to come with this trade. This is catching people going right through these all-time highs here, not all-time highs, but these recent highs. And, I think this thing's going to go higher. I think we could see 115 on this thing easily. So that's what's really rocking the marketplace right now. And the dollar, as you know, is relatively related to this. Let's just go right into the dollar. And let's pull up the December contract. Talked about not being short this thing either and trying to find long battle points on it. Ignored this area down here from the 15th of October into like the 21st and tried to use some areas to get long. The breakout close above the inflection point up top, 86. Kind of a retest there on the following day, and then we're off to the races again. We haven't eclipsed these most recent highs. Again, I think that's probably going to be a foregone conclusion. The good news is on a trade like this, again, I think the stops can be oriented possibly below the 86 area. And just, relax the stops, maybe lighten up if you've been in the trade, take a little off the table, and just let it breathe. Let it breathe. And that's hard to do sometimes. One of my friends I always tell him, I was like, you just can't stand to see profits, can you? They're always taking profits off too early. So how do you manage these trades? It's based on your appetite for risk and also what you're actually looking to get out of the trade in general when you started the trade. It's never a bad idea to take some profits off the table, but in times like this where we kind of sit near recent highs and on the dollar and then the yen is just, I don't think there's a lot of end in sight for that, actually. You might want to just kind of, based on the volatility that's going to be there, just relax the stops a little bit, take some off the table, and just let it breathe. If you get stopped out, you're basically in a free trade at that point. And that's the kind of situations that you love to be in as a trader, what's called a free trade. And that means you've kind of locked in some profits. You've got your stops in on the rest of it. Yeah, I'm looking at that gold and silver massacre. Let's move into that, actually, because that's a direct component after talking about the dollar-yen situation. Let's just kind of review what our mantra has been on gold. Here's the daily. We talked about the 41 area. I was really happy and feeling pretty chipper about gold in general. And when we got below 41, if you've been watching this show, we talked about, and we got a daily gold chart up right now. When we got below 41, it's like, got to say, uncle, you got to wait patiently. 18 was the next battle point, if you will. And that open below, this is where you can't be long anymore. You can't really there's nothing to key off of down here. And we talked about below 18. It's got to, that's Custer's last stance for gold, in my opinion, right now, or was. And the neat thing is as we opened lower below that 18, we came back and retested it for that powerful trade on the short side. Now, I'm a big fan of shorting things. The longer you trade, the more you fall in love with shorting things in general, because they usually fall faster than they go up in the stock world. And that means you can compress your time frames of the amount of points you can make in a shorter time frame, and you just kind of recognize that over time. It's very dangerous to fall in love with shorting things, but if you played we got some technical damage here, and you played that. I kind of stayed away from this. I was a little more bullish on gold than bearish. So I personally didn't catch any of this, which, again, to use that term sucks. I'll say it again. But, just a good lesson and primer on trading in general. Open, retest, former support, now resistance, and off to the races on the south side. So not a lot of reasons to try to get long this thing, and we've got some massive technical damage here. Here's the weekly. 06 was down here. We're probably going to close below all that today. So, and then also closing below recent lows on the weekly. So there's not a lot of good. This is not the time, in my opinion, to try to pick a falling sword on gold. Here's the short term. Again, as you can see this, if you're trading on the 240 levels, we had that consolidation and started breaking down. There's that 27 area that was really important before, but the daily levels are very apparent. I think what to do right now. Sorry about that. And I think we could head even lower on gold now because there's really nothing in the way down here. Excuse me, folks. And as we look at silver, we're going to pull this up. We talked about silver being in a range-bound situation in this band. We talked about waiting for silver to get away from this fair auction. If you'll notice, this was something that the fair auction was in play for a while. Actually, it's a very long horizontal fair auction that silver was in. It was really amazing and weird. I think we coined it as it was just revolving around this POC forever. We talked about waiting to trade this thing if it broke out and closed above 1773 or closed below 1675. Well, that happened. That move down on silver. Again, it was talked about. A lot of people may have been looking at this as accumulation area. To me, it was looking from a classical technical analysis standpoint, almost as a gathering itself to move even lower, and really couldn't peg that very well until we closed below and got momentum below these unfair lows, and that obviously has happened. And again, just like gold, there's really not a lot of information down here. Here's the weekly on silver. It's not a lot of information down here to try to go long. So it's okay to be short, not okay to be long right now. And that's just the way I'd look at that silver. I think if you were going to try to pick some battles on the long side, you've got some really patient waiting to do. And that's okay. The good news about this information we're talking about is if you were trying to stay long, you've got a chance to orient stops around these profiles, and that's what I like about it. And if you get stopped out, that's trading. You got to have stops in. I've traded without stops, and it's cost a lot of money. So from experience, when you're doing these kind of plays and maybe trying to gather. Silver could have shot straight up. This was kind of a crapshoot in here. That's why I wanted to stay away from it in general. But, put your stops in. If you want to be able to kind of take your ball home and come back to the playground every next day and play. And if you don't keep the stops in, that's not a good equation. So anyway, we can pick it back up from the long side later if that's what you're looking at silver as, but not right now, in my opinion. We will be right back, folks. Stay tuned, and we'll be back in a couple of minutes.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And kind of jumping around a little bit here, talked about the yen, gold and silver. I haven't got much farther than that so far this show, but let's take a look at the Nikkei. And this is what happened, folks, when an index reprices itself to the local currency. Insane. This is a move. This is like a 5% move. If you want to get out the calculator, I think I'm approximately right. 16,840 right now. The Nikkei is trading, and what happened to letting the marketplace figure itself out on its own? I mean, this government intervention thing, this is going to end. Don't get me started. It's going to end so bad. This is price fixing. Somehow, I mean, if a company did this, it's just crazy. Anyway, so that's the Nikkei. No way to be short this. Don't even try is my, not recommendation, but my statement on it. Here's the 240s. You got nothing up there. This thing has not gone too high. It's not overpriced. It can go much higher. They want inflation, by the way. So, they're going to get it, and this Nikkei is going to be a result of that. So let's take a look at the 10-year. Interesting that this thing is hanging in there, folks. Don't like the way it's starting to crowd this bottom area and kind of keep retesting it and not wanting to get away from it. That's a little concerning. But as the market, the U.S. stock market is caught fire again, and I want to talk about that a little bit more in detail. The 10-year really it's just amazingly hanging in there. But remember these areas, 126.08. We talked about this yesterday and probably the day before. And 126.02, that DMZ down there, if you will, you got to get away from there. And I mean, I'm still looking at this, again, turning the rents the same way I come to work every day. Treasuries are to be bought until we're told differently, and we are at support, and we have not been told differently yet. And amazingly so, it's kind of still hanging in there, the 10-year. So below 126.02, the bottom of that DMZ, we're going to be back in a fair auction on the weekly, and we're going to be below a fair auction on the daily. So that's going to be pretty damning for the longs, which means me, on the treasuries. And you got to pay attention to that. You got to be able to put stops in if you're going to play that game the same way that game's been played for the last, over a half a decade. I can't believe I can even say that, but that is true. Jeez. So anyway, that's the situation on the 10-year. And I just want to bring up the 30-year just to give some levels. The same principle goes for this one. Here's the don't have a lot of information on the 30-year, but 140.16 again, hanging in there in that DMZ, 140.16 up into, let's just call it 140.27. So that DMZ's we got to close below there, get below there to say uncle again on trying to pick longs on the treasuries here, the highly watched treasuries. Let's take a look real quick. And then we're going to talk about indices next round. But let's take a look at, I can find this here, December crude. I still think this thing is gathering itself just like silver kind of was doing. Not a lot of interest here, not a lot of follow-through on any buying. And I think the smart trade here probably, like silver, is to wait until we get below these profiles, let's just call it 80, close below it, then start, actually trading on the opposite side of a lot of people who are being forced to cover crude oil. Crude oil could go down to $70 in a blink. It's not down too far. Nothing's down too far or up too high. Those are, nothing's on sale ever. So, I'd patiently wait on crude oil, let it get out of this fair auction on the downside, and then just lay the wood to it on the short side if that happens. We'll be right back, folks. Talk a little bit about indices and also about some stocks. Hope to hear from you. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Got the ruble up right now. Talked about that violent pullback. That's a heck of a move down. And then having a new profile up here and being able to leverage off of that. Again, I think you still got to buy pullbacks, any pullbacks on the ruble. They did get some things done with the Ukraine seemingly. Hey, brother, we're back together on the natural gas pipeline situation. But, again, that doesn't change a lot when it comes to the ruble, especially versus the dollar. So, still on the long side on that one, guys. Look for reasons to buy. All right. Something kind of interesting that has developed a while back. I was paying attention to it, and, corn, December corn breaking out above profiles. The reason I'm bringing this up is corn was just getting creamed for a long while here and staying within, letting profiles regulate it down forever. This is December corn. When we broke back above, what's going on right now, interestingly enough, since the dollar has kind of been climbing again, especially with this new yen news, corn's not really acting that bad. I know you're saying, hey, why didn't you notify me of this a while back? And we did talk about it a little bit, and we almost had a retest of that, but the dollar situation, obviously this thing's priced in dollars. Corn may move higher. There's nothing to key off of here based on the dollar climbing again and corn kind of hanging in there. So here's the 240. If you're trading December corn, you got a pretty good battle point to pick down here at 364. So, it's consolidating still above the short-term profiles here. I think the dollar's probably going to head a little bit higher, so I think corn may edge a little lower, and then I think this is probably going to be the battle point on corn. But this thing kind of, I was very bearish on corn and actually continued to stay bearish, and this was kind of an anomaly to me for this thing to close above. Then it's okay to be long, not okay to be short on an intermediate basis. Had to call it quits on pressing the gas pedal continuously on corn. I actually thought corn was going to go below $3. But when that happened, that's it. All bets are off. It's not cool to be short corn when we break above fair auction like that. So, just food for thought on corn right there as the dollar is transitioning again higher, in my opinion. Okay, so we said we were going to talk a little bit about the indices and S&Ps. Let's go down that road. All right, so first of all, I wanted to kind of point out something when we look at the breadth here. Now, October 24th, our long-term breadth went positive. So that was last Friday. Today's 31st. So, okay, well, why did it wait that long to turn positive? I mean, our breadth turned negative on September 19th on the long term. That was the highs of the market. Now we're back at the highs. The breadth is positive. So, what does that mean? That means it's okay to be long, not okay to be short, looking at the breadth. But I want to, and I'll show you a chart real quick. This is only for an admin terminal here. I just caught that, Jay. Cream corn. That's an idea. Yeah. I like that pun. This is the weekly. So, as we had looked at this, and this is not available for the public, this is what I'm showing you right here. July 23rd, we had the crossover. Then we 8th cross back over. So that was about a 100-point swing there. Then it's okay to be long again, okay to be long. I'm going to take out the middle ground here just to make this real clear. So as we crossed over on the 19th, breadth turns negative on all-time highs. Really weird situation. Got to pay attention to it. And this is the long term. And, we were down 200 S&P points, and the breadth turned positive Friday, closed last week. And we only picked up 70 points on the downturn instead of 200. But, again, that's why I was, hey, the breadth is still negative. The breadth is still negative on the long term. Got to pay attention to that because we've done a lot of back testing on this back into 2003, and I believe in it. But if you're trading on a little bit shorter term time frame, that was weeklies. Here's the dailies. I just want to kind of review this. Here's the zoomed in situation. So here's the 19th, 22nd, had the crossover. Let me take this out of the way. Intermediate stayed short. About the 17th to 20th in there, we turned back positive on the daily. So a little bit sooner signal on the intermediate, which is going to be the case, to get back long again. Stop trying to pick battles on the short side. And as you've noticed this week, I have not been talking about shorting the S&Ps based on the breadth on the long term just rolling into positive. So now this is yesterday's close, 70% above. So, and where's the S&Ps? So the S&Ps are up here. I didn't think I'd see this, but we're seeing it. So when the breadth turned positive, we were actually breaking above profiles at the same time, and then it was okay to be long, not okay to be short. Like, no way, zero reasons to be short, all right? So, what do we do now? All right, so that's the history lesson. Here's the current lesson. We're on all-time highs. Things on their highs want to go higher. That is just a fact of life. It doesn't have to be a double top or some triple top or anything like that. More than likely, it will run some shorts out of the marketplace. Now, the only thing that is a stake in the ground here is that we've got a weekly profile high. That you got to pay attention to while considering what I just talked about. So today's Friday. If we get a close above there, then that's it. But you do have a little bit of a leverage point here that we may back off from, at least temporarily, around 214.50. If everybody sees that. So Pay attention to that number on the S&P if you're going to use that as a fence to be long or short against. Okay? And that breadth is positive. And, we haven't gone into the trading day yet, but look at the other time frames. And I added a new feature here so I could see new box attempting to appear above, new box attempting to appear below, so I can kind of get a bead on how many new profiles may be appearing the following day, following week, following 240 bar, 60-minute bar. So, again, and the breadth we've got on these other indices now. So let me catch up what's going on in the den here if anybody's asking me a question. Okay. All right, so let's kind of spill into the NASDAQ here. Nothing in the way on the weekly. I'm not even going to pull that up. So clean and clear. So, what do you do now? The NASDAQ, this is our 240, and has seen some, just like the S&Ps on our 240, has seen support, breadth positive. We got to buy support, still sell resistance. What the breadth really does for me is it eliminates one side of the marketplace. So it eliminates the longs or the shorts. We have, I think we've got a caller here. But the NASDAQ, it's going to be difficult to try to pick any battles on the short side here. So we want to, wait for new information. Unfortunately, there's no new information here. So, okay, I think we've got a caller, Mike in Thailand.
Hey, John.
Mike, are you there? Hey, how are you?
Yeah, I'm here. Can you hear me?
Yeah, I can hear you fine. How are you today?
Yeah, I can hear you fine too. I'm confused. I think I'm probably in the same kind of mood as you are.
Yeah.
John, I want to let you know about this article. I tuned in. Unfortunately, I don't tune in early enough to listen to your show because I really enjoy so many of the points covered in it. And I enjoy you having chit-chatting with that guy, Eric, too, just as an aside.
He's great.
But here, I enjoy listening to what he has to say, So, anyway, I came across an article. I don't know if you caught this or not, but I was wondering about this Japanese market all week. There's an article that came out on October 26th in Bloomberg, okay? You with me so far, John?
Yeah, I'm listening. Yeah.
Yeah, okay. I just want to make sure the connection is okay. Anyway, It says record bets against Japan stocks tell investors it's time to buy. Now, when I see headlines like this, now, let me give you an overview of the article. They're talking about how there's these massive shorts. There's a massive, tons of short positions going on the Japan market here. You see. So now I'm saying to myself, okay. I read the article. They talk about how it's been tumbling and over the years and stuff. But now there's record bets against it. So now it could be time. It's probably time to go long. I mean, they're going in this whole litany through this article. I can send it to you if you want to.
I'd love to see it.
And they're talking about short sales. So I'm saying, all right, here we go again. It sounds like they're setting this market up for a short squeeze. You know what I mean? Because they do this all the time. They do this all the time in Bloomberg, and I was like, but I didn't do it, and I should have. You know what I mean? I was thinking about buying a long ETF, for Japan, but I just didn't do it, you see? So anyway, and then now all of a sudden I look at, and I get to watch the futures all day, and it's just like what you said. I mean, the thing's up over 4 or 5% or whatever. So go ahead, your turn. Sorry.
Yeah. Okay. Yeah. my comment on that, and I really appreciate you calling in because it's great information for everybody to listen to that. But my comment on it was it was scary to be short the yen. I mean, that was the scariest trade in the books. I mean, I was, have been a big fan of trying to buy support on the yen whenever possible because there's no mystery here. I'm in Asia. You are too. You know what the deal is in Japan. It's a bad situation. So if there's any intervention, where's it going to be? It's going to be
on. Out, John. You say it's a bad situation as far as what?
Their economy.
Okay. I just because I have even more information that's kind of off topic, but go ahead, carry on if you would, please. Sorry.
Yeah, I'm over here in the Philippines right now. I'm going to be in Hong Kong next week, but the Japanese have kind of trailed off of even coming here because there's so many issues, and the yen's probably going to get creamed even farther. And if the MO was to devalue the currency, why wouldn't the Nikkei go up? And that was the scary trade, was to try to be short the yen or the Nikkei, no matter what the fundamentals of the stock market itself in Japan were saying. Plus, you got that kind of ace in your back pocket with the Bloomberg article. With all the short players out there. Japanese government is probably not beyond clearing those people out of the way. If you're a smart trader, I don't see how you could have been short any of the Nikkei right then. Does that make sense to you?
That's a good question. If you're a smart trader, who says I'm a smart trader?
No. I'm not saying. Yeah, if you look at it from that kind of global look, it's like you don't want to stand in the way of the Fed. You don't want to stand in the way of the BOJ. They've announced that they are not going to let off the gas pedal. How can how can anybody think that they're going to outthink something like that when they're the ones controlling the casino? It's just doesn't make sense. So, yeah, you're right. That's the short squeeze. With the article coming out, it was a setup, classic setup almost, with things like that out there. And I'm glad you brought that up.
Well, yeah, okay. Now here's another thing that's hitting my mind here, and this is really some really important stuff because, quote unquote, coincidentally, they're smashing the heck out of the price of gold right now. Okay, so we have we got about 10 seconds before break. I just wanted to alert you to that. Can you hang on, Mike? And you bet.
Okay, guys, we're going to be back after the break. Yeah, and we're going to talk a little bit about gold with Mike, and I think you'll enjoy it. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back. Mike, are you still with us from Japan?
I'm here, but I'm not from Japan. I'm in Thailand.
I'm sorry, Thailand. I've got a picture. Thailand's not a bad place to be. Where are you at in Thailand, by the way?
It's good. Rayong, you know Rayong, Thailand, the industrial estate.
Is that up north or is that down south?
It's well, you can't really call it south. It's south. It's about a 3-hour ride with no traffic from south east from Bangkok.
Okay,
so,
I've never been there.
Yeah, okay, but it's where all the oil comes in, and you know, it's an oil. It's the industrial estate of Thailand. It's about.
Okay.
I'm going to guess, but let me go ahead, John. What were you going to say?
Yeah, I've got gold up. We got about 3 minutes. I've got gold up. You were going to say a couple of things about gold.
Yeah, all right. Now, before I get to that, I must tell you, I would like to email you this link, but my email is down. I'm having trouble with it, so I got to get that resolved. But so if you just Google record bets, if you Google these words for you and your audience, it's called Record Bets Against Japan Stocks Tell Investors It's time to buy. Now, before I get to gold, so I can't. Did you get that, John?
Yeah, I got it. I'm actually
okay.
I've got a Bloomberg terminal sitting next to me. I'm actually going to search it on there. It might be even quicker to find it there.
Read between the lines in that article, and you'll see that they've been setting stuff up. Now, a couple of things I'd like to mention here, and I just keep listening. It all goes back to what Tom has been saying. They're trying to get rid of stock. They're trying to dump all this stuff. So now they're trying to get everybody to join in on this fake rally going on, like back in the States. And now, as we look, I look at my what's going on my one site, and I see the yen has dropped by 2%. Right? Does that sound about right?
You mean the yen dollar?
Yeah.
Yeah.
Okay.
That's true. Yeah.
Yeah. So, all right. So now they say, well, that thing has dropped so much, and now we have the coincidence. And then, of course, I don't believe in coincidences. So anyway, now they're bashing gold at the same time. Okay, they get this drop in the yen. They get the yen to really rally. Now it makes a new significant high. You see, it's been the highest now. Let me see here. I just brought it up before. We're the highest in the yen now, and we hit at least a 5-year high, and it's got to go back even further than that. I'm just looking at a 5-year chart. That's as far back as it'll take me. So now
got about 15 seconds, Mike. Got about 15 seconds. Can you give some closing words here?
Yeah. And then, so I think I'm wondering if today is going to be the final top in the Dow, because they're getting this thing to rally. The futures are up sharply on the Dow. I'm wondering if they're all doing this as a setup to dump on everybody before this big drop. You see?
Well, I tell you what, let's try to answer that question tomorrow. I really appreciate you calling in, and we will try to answer that tomorrow. Thanks for calling in, Mike. We'll catch you Monday morning, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.